What's going on, everybody? It's Jeff here. Welcome back to the channel. Happy Friday, everyone. I am making this video early on in the day because we've got some things that I really want to talk about. So let's get right into the video, guys. First off, if you're new to the channel, all I ask is that you hit that like button and subscribe. And if you're interested in joining our private community, first link in the description. We'd love to have you. We've got hundreds of members. I have my private portfolio over there. Go over stocks and strategies all day long, guys. So if you're interested, like I said, check it out. Let's get into it. First off, just want to look right now at AMC, the 1 day, 1 minute chart. Immediately at open at a big sell wall that immediately got gobbled up, hitting a high all the way of, what do we get to, about 1038, 1039. And eventually a little bit of profit taking by the day traders cooled off a little bit. We're sitting at 10.1. Getting over that $10 mark will be good today. Like I said, none of these price points that we get over on any given day means anything other than options expiring, out of the money, initial shorts that have to be covered, and so forth. But it is not a catalyst for what is going to happen on Monday. Just getting over that $10 mark would also be a good psychological level for us retail investors and holders, getting back to that double-digit marks. But there's a little bit of information that I really want to talk about in this video. Okay, I'm just going to cover a couple things, and then we're going to dive even deeper. Okay, so first off, just want to look at this chart by iborrowdesk.com. This has not been updated since the 21st. If you go over to Fintel as well, there are 0 short shares available, as it is saying, and it hasn't been updated since yesterday at 11:17 in the morning, which is a good sign for us. Not to say that there aren't a small amount of shares that are still eligible for shorting, as we can see by some of the level 2s, that there is still some activity going on. Going over to the options chart, this was something that I told you guys I was going to be paying attention to, based on a ruling that was supposed to go into effect that has disappeared from the DTCC website. Not really sure what the SEC is going to be doing about that. However, the amount of options volume has decreased a little bit, and if you go back to some of my videos, you can look at the numbers, and the data there kind of shows it. The theory behind this was that the hedge funds were abusing in the money options to hide their short positions. It's another good sign. I do want to point this out lastly before we get into the juice of this video. A lot of volume that is already starting to wipe out. A lot of this volume was there earlier, like I said, when I just looked at it, for that $10 mark. For your call options, a lot of them have closed out. And if you look at the put options, same thing, a lot of it has closed out. But getting above that $10 mark will be another beneficial. And the most importantly, like I said, it's going to be a psychological barrier that we had in our minds, getting back to that double-digit mark where we deserve to be. So let's get into a little bit of juice. So yesterday was April 22nd, known as AMC Day, as a lot of people on the internet have called it. Reason being for that was the rule that was passed on October 22nd, okay, for the customers who lend the broker-dealers fully paid or excess margin securities to provide the security lenders with collateral that fully secures the loan. Inevitably, if we are going to give you margin, we're going to allow you to use margin, right, which is basically a loan. You got to show, hey, we've got collateral. Picture, for all of you homeowners out there, when you go and buy a house and you go and take out a mortgage, whether it's 80%, LTV, or 90%, whatever it is, they get an appraisal on the house. Basically, the bank is saying, hey, listen, man, we're going to give you 100 grand, 200 grand, hey, maybe 500 grand. But inevitably, we want to make sure that if you can't pay it, you've got some type of asset behind you that can cover it. Now, obviously, it doesn't mean cash on hand. They can sell the property and be able to cover their funds. Same thinking of that. Now, the commissions had given these programs 6 months from the issue of the letter in order to comply, and that's why the April 22nd date was so important. Now, there's been a lot of speculation all over the internet, and I'm going to cover something that I actually had initially first heard about on Twitter. Kind of looked into it and kind of was just, a little bit blown away. I was a little busy, so I didn't really dive too deep into it. And then I saw about it on Reddit, which I take everything we see and read on the internet, period, but also with Reddit with a grain of salt. Did a little bit of research myself, and we are going to talk about this right here, capital X Cell CXC, which is a cryptocurrency. Now, the number one thing, guys, I want to point out to you is this right here. We are looking on the 24-hour time frame. We have a low of $11 and a high of $3,200. Okay, this would have put the entire market cap worth more than Bitcoin. Okay, if it hit 3,200 by the amount of coins out there in circulation, the market cap would have been higher than Bitcoin. So there's been some speculation Okay. When you buy the cryptocurrency and it drives the price up, that can be utilized as an asset to show to the broker dealers that you have the assets to be able to cover the margin you have in position. Like I said, this is just a little bit of speculation. Do I personally think to myself that the hedge funds would dump into this obscure cryptocurrency to drive the price up as much as it could and then be able to show, hey, we've got the assets behind us. Sitting in this, we can sell, get the assets back, and cover our positions if need be. So continue to let us utilize that margin and don't force us to be margin called. Now, as much as I think that is probably not the best idea, we've known by going throughout this process, for those of you that have watched, my videos and, been with me since we started this process in January, the amount of options that these hedge funds have to be able to cover their positions, cover their ass, whatever you want to call it, is very, very, very dwindling. So just a little bit of speculation. Inevitably, this is a very, very short-term thing. This is absolute abuse. And like I said, because of everything that's happening in the SEC, which we're going to get to in just a second, this is not something that is going to last or be held viable, okay? Next thing, I do want to point this out. We have another hedge fund collapse in Sweden. And it talks a little bit about this. And there's one thing I really, really saw in this article that kind of stood out to me. As one of Sweden's oldest hedge funds shuts its doors, its chief acknowledges the firm's quantitative strategies failed to cope with pandemic-induced market ructions. And it goes into explaining a little bit about it and so forth. But this was the sentence that really got to me, that I really want to talk to you about, guys. Okay, right here. More hedge funds have closed than started in the last 6 years, with 770 of them alone closing in 2020. That's absolutely insane. And a lot of that has been sparked with a little bit of COVID, a little bit of market volatility, but also the capabilities that us as the retail investors and retail traders, how easy it is to be able to pick up your phone with, whether you like them or not, apps like Robinhood, Webull. I personally still use, my Merrill Lynch, my Fidelity, and TD Ameritrade, just because I've been doing this for a while. And like I said, I started before Webull and Robinhood were around. But those companies have allowed the retail investors and the traders, and with the power of social media, to really change how the market runs. But like I said, 770 of them have closed their doors, and it don't look like they're getting bailed out, left and right, or else this would be all over the place. So that's a good one. And the last thing we're going to talk about, guys, and the most important one, is this one right here. The SEC chief plots first moves in the new role. Okay, and we talked about this earlier on my channel. The SEC chairman, Gary Gensler's lengthy to-do list for regulating U.S. financial markets has Wall Street anxiously waiting for his moves. He is known to influence and enforce rulings that are fair, okay, for everyone, okay? When the SEC has a bad rap for basically being like the corrupt cops back in the day when gangsters, where the gangsters would pay him off. That's, the SEC has a bad rap for being that. And there's articles all over about it. Basically, it's just all for show. And inevitably, these huge institutions and hedge funds can do whatever the hell they want. Well, he has the history behind him to fight this tooth and nail, which is good. All right. So we're just going to go over this a little bit about what this article says and why it's going to be important for us. So the market has been excessively accelerating at an unprecedented rate, and that aligns with an unprecedented surge in retail investing. Gensler, a critic of overzealous financial risk-taking, help expand oversight of the post-financial crisis futures market. So because he was on that one, they already say he's a critic of the overzealous financial risk taking, which abusing margin is absolutely overzealous financial risk taking. But also he's seen what happened from these markets. So he's going to do everything in his power, okay, to be able to ensure that this doesn't happen again, right? So the SEC's new Democratic majority is expected to clamp down on the rapid proliferation of new investment products and expand the depth of information required to be disclosed when selling them. All right. He also talks about SPACs. Now, if you guys have known, recently, SPACs were the hottest thing going in November, December, January. And then lately, that's probably the one sector that has been absolutely butchered, okay, because they're trying to crack down a little bit more on it because it solicits investors to fund the purchase of something with actual value. Okay, advocates for tougher SEC oversight and stricter disclosures are confident in Gensler's approach, but have concerns about the enormity of the task facing the commission. Right here it says, I think Gary Gensler's biggest challenge right now is he's got 15 front burner issues. And frankly, I don't think that regulations have seen anything like this since the 1930s. That's almost 100 years. So you can expect the crackdown. Now, this isn't going to happen overnight. It's going to take a little bit of time. You can go through this article. It's published up by The Hill. It's thehill.com. You can type this in, SEC chief plots first moves in the new role. But I saw this article, I read it, and I was like, you know what? I didn't make a video yesterday. I want to jump on here and talk to you guys that every little step that we've taken is so far been indicating us in the positive direction. And it doesn't just mean the positive direction of sending AMC to an astronomical price. It's just the fact that us, and I know a lot of you guys that watch my channel, I'm 31 years old. A lot of you guys that watch my channel are around that age range, anywhere from 23 to 44. We've got years and years and years ahead of us. So us being able to kind of identify the manipulation, okay, that's when they say the 1%, the top 1% control 99% of the wealth. Well, we're able to kind of fight back some of that manipulation. And no matter what happens with any of the stocks that we're invested in currently that have been manipulated, this is amazing for our future. Okay, so whether this happens short term to benefit us, which I believe it will, inevitably, I can guarantee you, right? Not just a belief, I can guarantee you that this will be beneficial for our entire future. So that's it for this video, guys. Enjoy your weekend. I'll see you in the next one.